Tonight's date is January 4th, 2015. Starting out, I want to look at Amazon because Amazon to me was one of the better directional movement stocks of 2014. I'm going to look at a weekly chart, and you can see pretty clearly here. Let me copy this and get these trend lines out of the way so that we just straight up can look at the chart itself and put it in the context here. Just going to get these two trend lines. Alright, so what I like about Amazon was, number one, during 2014 we really saw a lot of movement, and it was movement to the downside. Amazon closed 2013 around $400, and you closed 2014 around $300. So you lost just about 25% during the year last year, and that is a nice downward move. I like direction, so I think there's a decent shot Amazon can continue on a directional basis. The other thing I like about Amazon as we get into the new year, whether it goes up or down, I think maybe it can go lower, but regardless, it's near a key round level regardless of what I think it will do, regardless of what my prediction would be. You're right down near $300. $300 psychologically is important. Anytime we have a $100 mark on a high price stock like Amazon, I think it's significant. So if you hold $300, I think you get a good chance at a bounce back up. But if you break down at $300, then I think we could see Amazon test its recent 6-month lows in the 280s, and if you break below 280, there's really not a lot of support on Amazon until the 240 to 220 range. So I think there's good potential on Amazon. As for the upside, if you look at it, you can see this downtrend line on the weekly chart off of the all-time high has capped the stock multiple times, most recently in October. And this is going to be a downtrend line that I'll be watching here in the early part of this year. It comes into the year up around 325, but by the end of the month, this downtrend line will be down around 320, and by the end of February, the downtrend line will be down around 310, and eventually, I don't have the dates here, but this is probably sometime in March or April, the downtrend line will be around 300. So, bottom line, Amazon showed good direction during 2014, and it also, if you go back to 2013, showed good direction as well. Closed 2012 at 240, closed 2013 at 400, good direction that year. So hey, if it ain't broke, don't fix it. Amazon has shown good direction 2 years in a row, therefore I wouldn't be surprised if we see another year of solid direction from Amazon. So Amazon is one of my favorite stocks amongst my primary list, just from a potential setup as far as what I think it can do in terms of direction. Other one I want to look at that I don't trade so much anymore, but I know a lot of you guys do, and that is Apple. So let's get a chart of Apple up here. So Apple, of course, 2014, I will remember as the year of the Apple split. They did a 7-to-1 split, took the stock from $600 a share to $70 a share, $75 a share. And now here we are. It's since climbed back up, back above 100. You are more or less, you're at all-time yearly highs. I don't want to confuse anybody with what I mean by that. The all-time high, of course, is 120, okay? But you made that new all-time high last year. This is the first year in the last few years that Apple is going in above that all-time high of $700. Again, if we look at a weekly chart, a lot of these are going to be weeklies. You look, 2012 you got up to 700, but then 2013 Apple was in the doldrums, and really the latter part of 2012 got hit. So now, after a couple year hiatus, so to say, Apple's back at it, and you're back above that $700 level if you think about it, right? Because 2012 September split adjusted is $100, but it was a 701, so you multiply it by 7. The actual price was like 704, 705 or so. So we are above that. And Apple did a really nice job of rallying in 2014, and especially the back half of 2014. From June to the end of the year, this thing was just a monster, going from $70 to $120 on a stock with that type of market cap. We're talking about a 70% rise. If you look at a year-over-year basis overall, you closed 2013 at $80. You closed 2014, I'm just going to call it 110. So year over year, you rallied 37%. A stock with as many outstanding shares as Apple, that's a lot of money that needs to come in to move that. So that's impressive. But from a trading perspective right here, right now, Apple right on top of this, or right underneath the 110 level, just over under 110. I like it because you saw a pretty decent bounce on Friday. Your low was 107s, but you were able to close off that. You're seeing some pretty good range on Apple these last few days. Your daily ranges have been very wide. 3 out of the last 5 days. You've had some awesome range back in the middle part of December, early part of December. Bottom line, if you are a stock trader, Apple has been a great scalp trade because the ranges are so wide and the volume is so high. You can get in and out no problem. The spread is never more than 1 or 2 or 3 cents at the most. All right, so if you are a scalp stock trader, I think Apple's a great one to play if you don't mind paying, $110. As for the options, I've kind of shied away from Apple on the options, just personal preference, just because the options are so much cheaper than they used to be in terms of absolute cost. But anyways, I'm not going to get into that. Bottom line, over under 110 here. If you are staying below 110, then I think you go down and test the December low just above 105. But if you can be above 110, then I think this is a pretty decent consolidation on Apple. I know this move from 120 down to 105's probably scared a lot of people, but hey, that's what happens when you go from $95 to $120 in just 5 weeks, like it did from the middle of October to the end of November. All right, you're going to get those violent pullbacks. Nobody complains when the move is violent to the upside, but then they're all scared when the move is just as violent to the downside. I mean, that's the way things work. So watch Apple around 110. Wouldn't be surprised if you saw some consolidation here, but if you can stay around it, I like it to get back up towards this 120 high. Longer term for me, it's pretty simple on Apple. $100, guys. That was your previous all-time high going into 2014. We talked about it from back in September 2012. $100 split adjusted is $700. So psychologically, I think even if Apple pulls back a little bit at the beginning of this year, long as you stay above 100, you are good to go to the upside more longer term. Below 100, and Apple can start being in some trouble again, but we'll tackle that once and if we get there. Another stock I want to talk about, lower price stock, but it's been highly active lately. It's a IPO, NDRM, Neuroderm. This isn't a stock that I follow, but I noticed some of you small cap players posting about it the last week or so in chat, and so I want to talk about it because it just blew up on what was this, the 30th, so I guess that was Tuesday. You opened at $8 from a previous close of $6, so you gapped up huge to begin with, and then you closed at $18, so you were up like 200% on the day, and then, not necessarily surprising, you have since tanked back down to $12. Well, hey, what's interesting about this to me is from 6 to 18, you got a $12 range. Okay, that was a 12-point move that you made from December 29th, that $6 close, on up to 18, and now you closed right at 12 bucks. Well, 12 bucks is exactly the midpoint of 18 and 6. So even though you've tanked pretty good these last 2 days, hey, you're still up 100% from where this move started, and I think you can get a pretty decent bounce back relative to this $12 level on NDRM. I really like $12 as a reference point for you guys that are trading these small caps. If you're trading the small caps, you got to give NDRM a look out of the gate tomorrow, see if it has some volume. If the volume's not there anymore, then it might just need to consolidate and maybe not be that exciting. And the volume did drop off on Friday, but anytime you get a move like this, I think you should follow it for a few days in the small cap world just to see if it gets active again, because if it does, you could see a really good rebound on this back above 12. I wouldn't be surprised if you can get back up to 14 to 15 in a hurry on NDRM. Below 12, and looks like you're going back towards 10 bucks and then $10, psychologically important level. Looking at Gild, G-I-L-D, big time biotech name. Gild had a monster 2013 and 2014. If we just go back a ways, I mean just a few years ago, in January 2013, Gild was a $37 stock. I mean, what a run. You saw this with a lot of bios over the last 2 years. They just caught so much fire, got a lot of money flow into them, and Gild was one of the leaders of that, has one of the higher market capitalizations in the biotech space. Recently, though, you can see here, you don't need me to tell you, big drop and huge volume. Huge volume. So that's intriguing. If you trade biotechs, Gild is one of those names you got to be given a look after you saw this move. Huge 2-day move. I mean, guys, 65 million shares. Are you kidding me? 65 million shares at 90 bucks. I don't know the math directly off the top of my head, but I think that's like $5 billion or something. 5 billion with a B that traded on that day. So just a ton of volume here. And even still, the other day, 12 million shares still trading. So even though the volume's lower than that huge day, still a lot of volume here. All right, so what's interesting to me about Gild right here, right now, is here was your big gap down day, and then you had some follow through the next day. You've since recovered, but now you're right back into the area of the gap down, and you look like you might have stalled out at the base of the gap down. Okay, if you were to just kind of say that this is the base of the gap down here, you came right up to it, but now you've pulled back and you're testing on 95. I like Gild relative to 95 in terms of the setup here. I think if you are staying below 95 bucks and it closed just slightly below it on Friday, if you're staying below 95, you're going to go down back towards this high 80s to 85 mark, which was the low from last week. But if you can stay above 95, then I expect it to knock on the door of this gap down resistance area here, and if you can break above that gap down resistance area, get above 100 bucks, then Gild looks pretty good to continue to rally. And that's been the long-term trend, has been to the upside. I would expect that to continue. But Gild is at an interesting point here, because you look on this chart, and this move that you had last week, if we go back and look at a weekly, you didn't see a move like that at all. I mean, that's the highest volume Gild has traded since 2011. Looking at a weekly chart here, your weekly volume on that big drop was 172 million shares, all above 85 bucks. That's your highest volume since 2011, when the stock price was around 20 bucks. So your dollar volume far away blows out what you traded back in 2011 and high volume in 2012. Even this high volume here in April 2014, the price was at 66 bucks. So high volume back then, but much lower dollar volume due to the price being 30 points lower. So, anytime you get something like this, you just got to kind of take note of it if it's in your sector that you watch or a stock that you follow closely, because it tells you, hey, a lot of money came out, but somebody stepped in, a lot of money also came in and was buying, and it can represent a longer term pivot point on the stock. So with that said, longer term, that low from last week, or 2 weeks ago I guess, is critically important, and that is at 85.95. I'll just call it 86 to 85, critical low on Guild now moving forward this year. If at any point, especially early this year, you're able to come below 86 to 85, Guild really opens up and targets 75 to 65 in my opinion, which would be the April 2014 lows. But as long as you stay above that low, then it's just a hiccup, and eventually I think it gets back above 100 and finds its way back towards the all-time high of 115s. I want to look at Tesla now. So Tesla is interesting to me because for all the hoopla, for all the up-down action on Tesla, if you look over the last 8 months, you have not moved. Tesla in April was around 220 bucks. In May it was around 220. June it was around 220, moved up. July 220, moved up. August and September were the only 2 months where it ever really got above 220 and made some movement to the upside. But then October back near 220, November back near 220, and then of course December back near 220. So what am I getting at? 220 is important, and that's right where we're at right now. So I'll be watching this 220 action. If you were to just draw a line on 220, you can see all the time that Tesla spent on either side of that line. Okay, so we've seen it act as a pivot. I'm just going to get out the marker here and going to use red to show, hey, look, when this acted as resistance, look, it was right on top of 220, acted as resistance, and then you got the green here. You can see that it acted as support. And now the question is, here we are again right near 220. Is this going to be a green line, or is this going to be a red line? I don't think we know yet. I think that's why we'll be waking up tomorrow to see what the market's doing. I think Tesla is one of the names that pretty early on in the year we should see what this thing is going to do relative to 220. Are we breaking back up towards 230s, or are we rolling back over towards 210s? What I do find interesting about Tesla is it is, I believe, the -- consensus pick to begin the year. I think I saw an article on CNBC. If you just type into if you type into Google, it should come up. See this article right here? Cheer up, Iron Man. Tesla top 2015 Wall Street pick. Right? So Tesla shares are due for a 30% comeback in the next 12 months based on an analyst price target, average analyst price target of $270 compiled by FactSet. That is amongst the top expected moves. Why am I pointing that out? Because I think sites like CNBC and analysts, I think they're pretty useless at the end of the day, and I think it could actually be a contrarian signal that, hey, Tesla's expected to really have a great 2015, and maybe that won't happen. What's even more interesting about this article is they say shares are due for a 30% comeback in the next 12 months. Well, I don't know if they weren't paying attention, but Tesla closed 2013 at 150 bucks, and it closed 2014 at 220 bucks. So that is a 46% increase in 2014, nearly 50%. Yet they're acting like the stock was down in the year of 2014. So I don't really understand what point they're trying to make. But bottom line, maybe it's a contrarian play here. Hey, everybody's talking about Tesla rallying back higher Well, you know what? It did rally very nicely in 2014. Granted, it finished off of its all-time high, but now maybe if you struggle with this 220 level, it could set up to actually go a lot lower and challenge that December low. But that's just a thought I'm throwing out there. We'll see what it does relative to this 220 area and make some opinions in reaction to that from there. Those were the individual stocks that I had on my list that I wanted to discuss for you guys and give insight to. I am going to talk about the S&P as well, but before I do that, I'll ask if there are any stocks that you guys have that you would like me to check out. Alright, we've got Netflix. So let's check out Netflix. Netflix is in my primary list. I follow Netflix every day. The reason I didn't talk about Netflix is because I was just looking at the last 3 weeks. It hasn't been giving a lot to talk about, I feel like, with the exception of this kind of 2-day shakeout. 2 or 3 day shakeout in the middle of December. You've been pretty flat on Netflix. You look in October, November, it went through a long stretch of flat sideways price action, and then it did drop, and now here we are again going on about 2-3 weeks of more or less consolidation, sideways price action. So just that's why I hadn't brought it up in my list. And I'm just wondering what happens here at 350. 350, midway point between 300 and 400. So let's see. Can you get above 350, or do you stay below 350? It's really just a simple setup in my eyes. I don't have a ton of rhetoric or a means of spinning the setup on Netflix. Hey, if you start pushing above 350, decent shot that you start to rally back. If you're staying below 350, decent shot that you roll back over and test this 320 low from the middle part of December. The one thing I will say, on a longer term basis, this high volume low from earnings back in October, $333 was the low, I believe. Nope, sorry, $331 was the low. That is key during this year of 2015. 331 is a key level. If you are staying above it overall, Netflix should either just continue to consolidate or get back up, but below it, and she could sell back off into those 200s. Netflix is one of the first names to report earnings. I believe the second week of January we will get earnings from Netflix. We might even have a confirmed date right now. Yep. Okay, so not the second week, but January 20th, which is a little bit later than Netflix actually reports, but 2 weeks from Tuesday we'll have earnings on Netflix. We know what happened last earnings, so I'm sure that'll be highly anticipated this time around as well. So I'll have a lot more to say on Netflix once I see what it's doing relative to 350, but I'm hesitant to really have much of an opinion on it while it's just right here at a key area. Any other stock tickers? Okay. So we're going to look at the S&P 500 here. So the S&P, we know it's in an uptrend. It 2014 just battled back from every shakeout that it tried to pull off, and could never sustain any dip for longer than a week or two. There were two big ones, I'd say, and that was the October shakeout, late September, mid-October shakeout, where you went from 2,000 down to 1820. And then just a few weeks ago, you had a pretty good shakeout. You went from 2,075 down to 1975. Both of those, though, you were able to battle back. I do think it's kind of interesting that we saw this volatility creep up like that towards the end of the year, so close together. October, December, two big shakeouts. The shakeout prior to October, the last one was in July, so we had a period of about three months of calm, or 2 to 3 months of calm, and then the one before that was in early April. So again, we had 2 to 3 months of calm, whereas then between October and December, we really only had about 1 month of calm. So I think that could be a sign that the market wants to get a little bit more volatile, which then my interpretation would be maybe we are setting up for a pullback, but we'll see. I think the bulls deserve the benefit of the doubt for now. My gut feeling is that we are going to pull back, but until I see price action support that gut feeling, then I'm not going to discuss it too much. I'm just going to be watching 2050. I think if you stay above 2050, we keep going to the upside. Below 2050, and I think that's where that pullback option comes into play, with 2,000 being a critical level overall now early this year. Anything above 2,000, you're solid. Below 2,000, and we can roll over. And this December low, 1972, below that, really opens things up, because your next obvious level of support wouldn't be until the 1880 to 1820 range on the S&P. So right here, right now, 2050. More intermediate term, 2000 to 1970. Longer term, below 1970, you can really sell off, but above 1970, this market's going to do one thing, one of two things: consolidate, go higher. It's just that simple. Another stock request. Facebook, talked about this with my live trading subscribers earlier today. Facebook to me is kind of like Netflix. It just hasn't really been doing much overall since a gap up in July. If you look at this gap higher in July off of earnings, it took the stock to about 75 bucks, and you've been spending time on either side of 75 pretty consistently, on and off, throughout the last few months on Facebook. Recently, you maybe started to get the channel to elevate itself some with some higher lows as you made new all-time highs and got above 80 bucks, but you weren't able to hold. What I want to see on Facebook is I'd love to see it battle back to 80 bucks right away. I think if you could get back to 80 right away, talking this week, then Facebook is really in good shape and maybe giving a sign that it wants to go a lot higher. But if you struggle to get back above 80, then I'd look for that pesky 75 mark to come back into play, where then it just becomes a over-under 75 setup on Facebook. Any others? One thing that I wanted to discuss here, and I wrote about it on our blog today, is the concept of a new year bringing a new you, and how everybody sets their New Year's resolutions and all that stuff. And this is really important when it comes to trading, because I know in your personal life you probably set some things aside that you want to do. For me, I want to eat in more. I think my girlfriend and I, we go out to eat too much. Not only am I spending money that I don't need to be, but I'm eating food that I probably don't need to be. all the time as well. But professionally with my trading, I think it can be a big trap at the beginning of each new year. You go back, you look at how much money you might have made in the year before, in this case 2014, and you get in that kind of comparison mentality. It's only natural that you look at that, you say, okay, well, now I need to make more money this year. And, that may be how you feel. My personal feelings, though, I don't think that's how you should look at the new year. You can't look at a new year and say, all right, I have to do better than I did last year, and the only way I'm doing better is by making more money. You don't want to do that. To me, I go into the new year and I look at it like just another Monday. All right? At the end of each week, I review my gains and losses. I see what I did well. I see what I did poorly. And I try and get better over the weekend. And I go into that Monday conscious of that, wanting to do better, wanting to become a better trader, remembering my disciplines, remembering what's led to my growth so far. And that's how I view the new year. All that happened is we had a couple days off, and the calendar, instead of saying 2014, says 2015. But I don't know about you. I didn't wake up feeling any different. I still put my pants on the same way. I still brushed my teeth the same way. All right, nothing changed. So nothing should change in my approach to trading. I should still be trying to do all the right things that I'm always trying to do anyway. So just avoid that, comparison mentality, because it can really get you in trouble. And I suggest you watch this video. I share a little personal story of mine from 2013, from 2012, from when I fell into what I call the New Year's trap, and I think maybe you might get something out of it. Sorry, Coconut. Not going to discuss TVIX because it is a garbage instrument in my opinion, and it doesn't trade based on technicals. It's just a flawed security, so technical analysis is pretty useless on the TVIX in my opinion. I'm not going to talk about something that I don't understand. Any other questions? Sorry about that. Twitter, let's look at Twitter. So Twitter is interesting to me because I think Twitter is kind of like Amazon in that this thing really got hit in 2014 and tried to bounce, but has since come back down and broke down below 40 bucks at the early part of December, late November, and now you've been consolidating in a similar fashion to the consolidation that this blue box highlights on my screen right here. And I think Twitter could be setting up to break down again. Right? If you stay below 37 bucks, Twitter's going lower. It's that simple. Below 37, Twitter's going to go back down towards 34 bucks. So watch it on this. You might see a bounce towards 37 tomorrow. Could create a shorting opportunity in my opinion. I really like a short trade on Twitter if below 37. Above 37, and it's more of a wait and see to me, I think it could bounce towards 40. I personally, just my personal preference, not a huge believer in the long trade until it were to regain 40. That approach is going to miss out on some really good upside, obviously, if it does bounce from 37 to 40. That's why I stress that that is just my personal preference, because those of you who think differently, hey, you might have a really nice long trade here if it gets above 37 and you play that 3-point window towards 40. But to me, intermediate longer term, I'm not very interested on a long trade until it can regain 40 bucks. So that's what I'm thinking about. Otherwise, like I said, short trade while below 37. I think 34s is where it wants to go. Good question. What is my best strategy that gives the best chances of success with substantial moves, and how do you plan to use it better? You know, my strategy is to make trades I believe in and, you know, react to movement. So if I see Twitter staying below 37 tomorrow and it looks like there's some good range, I better be buying puts, because I just told you guys I think it's a good short trade while below 37. You know me, Coco. You used to watch me trade. I don't have a strategy in terms of moving averages or MACD or you know, crossovers or Fibonacci's or anything. So it's tough for me to say this is my strategy. My strategy is to listen to myself, you know, because I think I make good trades when I listen to myself and I react well. It's just that simple. So for me, I just hope to continue to get better at trusting myself and implementing the proper disciplines in terms of size management, number one, which I think is most important. Number two, average winner being bigger than my average loser. And number three, having a win percentage that is greater than 50%. Because at the end of the day, if your win percentage is greater than 50%, and if your average winner is greater than your average loser, you're going to be making money. I guess if you pushed me, you know, if you changed the question a little bit and just kind of ignored the strategy, because, you know, I don't think I have a ton to offer on strategy since I'm really just a level 2 trader, and you just asked me what is the one thing you want to get better at, it would be having more confidence when my positions are working out. I think too many times in 2014 I sold for no reason and watched a 25-30% gain turn into a 100% gain when I knew full well it had that potential of turning into a 100% gain. So, you know, I just want to get better at being more confident in my abilities. But again, for me, it's about getting better each week. I'm not trying to take a giant leap here in 2015 just because it's a new year. I don't really care. I try to get better every day, every week. I think it's easier to evaluate yourself week to week. I think it helps you keep a clear head on your shoulders. I know I got better in 2014 because I went back and watched film of my trading from January 3rd, 2014. And if I could tell you how fucking stupid the person trading on the screen was, then you would be amazed. So, you know, that's what I'm most concerned with. When I turn that film on and I watch it, am I happy with what I see? Any other questions, guys? Do I approach Mondays different than other days of the week? I do now, Corey. 3 months ago I did not, but I realized that I used to short premium later in the week and go long premium earlier in the week, and I realized I had that backwards. So what I do on Mondays that I didn't used to do is starting around 10:30, 11 o'clock, I start looking at premium shorts, where I used to be kind of scared to short premium earlier in the week. I've realized I have much better success doing it earlier in the week than later in the week. So that's one thing that is different in my approach on Mondays execution-wise strategically, is I will consider shorting premium if I don't see long premiums working out. The later in the week that it gets, the less likely I am to look at premium shorts. Good question. Am I just focusing on half dozen stocks for most of the year, or do you do extensive scans now and then? My guy that's asking this question, I gotta throw him some shit for a little bit, because if he'd read the emails that I sent him, he would know that I've been watching the same 7 stocks for the last 12 months, and I have no intention of changing those 7 stocks for the next 12 months. So the answer is I do just focus on the same half dozen stocks. I don't do any extensive scans at all. The only scanning I do is when I see some of you guys talking about different stocks in the chat room that I don't follow, I'll check them out and I'll post them. I'll post some analysis on them to help out other people that I know are looking for different stocks. But I don't go out of my comfort zone. Any other questions? No, I really don't spend a zillion hours on off-market hours. I um, I do my prep. I spend about 30 to 45 minutes going over the 7 stocks you see listed here: Tesla, Netflix, Amazon, Google, Priceline, GoPro, and Twitter. And then I usually spend another 30 to 45 minutes watching film of the previous day's trading, or whatever. So maybe an hour to an hour and a half outside of market hours. I probably do a lot more work on the weekends. That's when I maybe examine some stuff a little bit further. But I think one of the things I learned in 2014 is analysis paralysis. You try and study, you try and overstudy, you try and do so much, and it ends up being counterproductive to getting better. So I kind of have tried to get better at simplifying things and just focusing on the black and white and not trying to find so much gray. Another question: if I am new to a strategy that shows good results, what is the best way to practice using it, the fastest way to master it, and increasing size over time? That's another good question. I wish I had a good answer for you, but I really don't. I think the best way to practice using it is to use it. That's how you practice using it. Keep using it, especially if it's showing good results. If it's showing good results, use it as much as you can, but only when it's appropriate. Don't use it when it doesn't apply when the strategy shouldn't be applied. It's your strategy, so I'll let you figure out when it should be applied. Every time you feel like it should be applied, use it. That's how you'll find out if you should be using it in those circumstances. Make note of the circumstances you're using it in so you can track, so you can log things. And the fastest way to master it, again, the more you use it, the better you'll get at mastering it, increasing size over time. You start small, that's a given, and then after you show yourself, I would say 6 months of consistency, then you start to ramp up size a little bit. For me personally, I traded strictly one contract at a time for probably the first 6 to 8 months of 2014. After that, I started ramping up maybe 2 or 3 contracts at a time, and that's where I'm at going into this new year. I'm probably at 2 to 3 contracts, which is still small, but to me, I think, hey, I was doing 1 contract, now I'm doing 2 or 3 contracts. I've just increased my size by 200, 300%. And over time, if I'm up to 4 or 5, it'll be another 50%, another 100%. So I'm not going to jump, though, from 2 contracts to 10 contracts just because I showed myself some success with greater contract size. That wouldn't make much sense to me. I need to stay the course, step by step, go from 1 to 2 to 3 to 4. Don't skip numbers. Alright guys, this was recorded. It